Nikola last reported earnings in early August. At the time, they reported a quarterly loss per share of 24 cents. They also reported a negative 146% return on equity. And get this, a negative 1,475% negative net margin. They also announced that they expect to achieve a negative 87 cents per share for this fiscal year. At that time, Nikola stock was teetering on the edge of a cliff, and it is safe to say that they just fell off as price is now below the dollar level. How did we get here? Recent price action, we saw a bottom at 50 cents. We saw buyers bid up price to the $3 level, and that was due to a reverse split, and that was actually the opportunity to short the stock. You have this beautiful M pattern and a retest before the next leg down. Now, before we continue with the analysis, let's look at the beginnings. Where did it all start? Now, this article is titled, "Where Will Nikola Stock Be in 1 Year?" But I want to discuss, where's it going to be in 1 month? Let's get to the article. So Nikola initially impressed the bulls when it went public through a SPAC in 2020. The electric semi-truck maker stock started trading at $37.55 on its first trading day, and it more than doubled in 6 trading sessions and reached an all-time high of $79.73. At the peak, it had an enterprise value of $28.7 billion, even though it hadn't shipped a single vehicle. It was being valued based entirely on the ambitious production targets it set during its pre-merger presentation that same year. Well, what was it targeting? At the time, it claimed it could sell 600 battery-powered EVs in 2021, 1,200 in 2022, and 3,500 in 2023. How did it do? It didn't deliver a single EV in 2021, only delivered 131 EVs in 2022. It originally planned to deliver 250 to 300 EVs this year, but a recent recall of most of those vehicles and a temporary suspension of its new EV sales could derail this plan. They got 4 months left. Now, when it comes to management, Nikola recently brought in a 4th CEO in many years. Company also approved a plan to double its share count so it could raise fresh cash by selling more shares. And it recently filed to sell $325 million in convertible notes. What's the worst case scenario? It's not in the realm of possibilities that Nikola could see its business fail within a year. It ended the first half of 2023 with $227 million in cash and equivalents. But all that cash came from 11th hour cost cutting and capital raising tactics during the second quarter. Nikola ended the second quarter of 2023 with $615 million in total liabilities, which gave it a debt-to-equity ratio of 1.2. However, its recent convertible note offering and plans to double its share count could push that ratio even higher in the second half of the year. That's probably why Nikola's insiders sold more than 5 times as many shares as they bought over the last 12 months. If its stock drops below $1 again and stays there for too long, it could get delisted from the NASDAQ. And when it gets delisted, it's going to be even harder to raise capital. So the downside momentum was so great and has been so great that after we broke down from this range bound price action and hit the last level that was holding price up, we couldn't even pull back to the origin of the breakout. And on Friday, price broke the dollar level, which I'm going to call the do or die level. I'm looking for price to continue to decline. Next target is going to retest all-time lows at 50 cents, and in the process get delisted from the NASDAQ. Thanks for watching. Subscribe. Please like the video.